Good morning, everyone, and welcome to the Efficient Benefit Consulting's webinar on prescribed assets. Just for house rule purposes, if you can ask everybody to switch off their videos, except obviously for the speakers and also the microphones, that will assist with the presentation. The issue of prescribed assets has been a hot topic since the ANC in 2019 stated in its election manifesto that the party will investigate the introduction of prescribed assets for investment in social and economic development. That includes retirement funds, which include obviously your pension funds, provident funds, but as well as retirement annuity funds that falls under the Regulation 28 of the Pensions Fund Act. The question is, how will this affect South Africans' hard-earned retirement savings going forward? And today I have Dawie Rood and Johan Gous joining me to give their views and the impact this may have on the economy and retirement fund members. Dawie Rood is the chief economist at Efficient Group, and Johan Gous is the head of advice at Sasfin Wealth, and he has a wealth of experience in consulting to retirement funds on their investments. So welcome, Johan and Dawie, to this webinar.
Thank you, Marius.
Right, let's start off, and I want to start with Dawie. Dawie, what is your view on prescribed assets and the impact it may have on the economy in the future?
Thank you, Marius. I think you said previously when we discussed this that you will give me about 10 minutes or so to just give a bit of a background on what's going on in the South African economy. Is that correct?
That's correct, yes.
All right, about just in a nutshell, what is going on with the South African economy? First of all, I think I need to start off by saying that the South African economy was in very deep trouble before this crisis, before the so-called COVID-19 crisis. The South African economy was contracting already. We were already in a so-called technical recession. But if you compare South Africa's per capita GDP, we have been getting poorer for the last five years in any event. So we were in very, very deep trouble already before this crisis. It's important to understand that. The reason why we were in crisis is simply mostly because of the mismanagement of the South African economy by government. And of course, the way that the state-owned enterprises have been mismanaged, the way that the fiscal accounts have been mismanaged and the like. So that is where we found ourselves before this crisis. Then now we have the so-called COVID crisis, and it's important to understand that this COVID crisis is not having much of an impact, or the virus is not having much of an impact on the economy or on the world economy. The impact comes from the measures that are being put in place to contain the virus. Now, it's important to understand this, because I want to emphasize the importance of getting this economy to grow and to open up this economy as quickly as possible. Of course, not to be irresponsible, but it is of the utmost importance to get this handling this crisis. So what is going to happen to this?
Dawie, you just cutting out on your side.
No. Is that better, Marius?
That's better, maybe. Yeah.
Okay. The South African economy is likely to contract by approximately 10% this year. This is the biggest contraction ever in the history of South Africa. So we're looking at the economic contraction of approximately 10%. On a per capita basis, per capita GDP could fall as much as 15% on average in South Africa. So the average South African could be about approximately 15% poorer this year than last year. And then keep in mind that we have been getting poorer for 5 years. The last time, if my estimates are correct, the last time we were here was in 1981. So we would have lost approximately 40 years in terms of per capita GDP. A couple of other numbers that I think are important is that we're probably going to lose more than 2 million jobs this year in South Africa. We will see a huge increase in poverty, and more than 100,000 businesses are likely to close down their doors. So that is the reality, is that's where we find ourselves in South Africa. Maybe a side note, the virus in a very bad case scenario is probably going to kill less than 50,000 South Africans. I don't know of anybody that's making an estimate like that, but it's probably going to be significantly less than that. While this increase in poverty is probably going to kill more than 300,000 people over the next 10 years. And that's simply illustrating the importance of getting this economy to grow again. But of course, it is not only the private sector and an increase in unemployment and things like that that is affecting the South African economy. It's the state itself will be affected quite heavily by the contracting economy. Before the crisis, the budget of the Minister of Finance suggested a fiscal deficit of approximately 7% of GDP. The minister already indicated that the debt levels will exceed 60% of GDP in the current financial year. That's before the crisis. What we're probably going to see now is a fiscal deficit in the region of approximately 15% of GDP. We're probably going to see this year that the state debt levels will exceed 80% of GDP, and state debt or the fiscal accounts has become completely and totally unsustainable. The Minister of Finance, of course, realizes this, and he wants to contain the debt levels or make sure that the debt levels do not get out of hand. And he proposed in his emergency budget a significant cut back on state spending. And he's proposing a reduction in state spending from this year to the next year of just close to 100 billion rand in nominal terms. Politically, that is going to be extremely difficult to achieve. I do not believe he will be successful in that. And in fact, I think politics will prevent him from doing that. And another side note is that I also do not believe that Tito Mboweni is going to be around that much longer as the Minister of Finance. There is simply too much pressure and too much political uncertainty and leadership uncertainty within the ANC. Why is this important? Why is it important for prescribed assets? Now, one way of looking at the reality is that currently South Africans save approximately 15% of GDP. So our total savings in South Africa is far too low. We save approximately 15% of GDP. Exactly the same amount of money that will be required by the state to fund the fiscal deficit. So the total savings of South Africans will go to saving, or to funding the fiscal deficit. And that fiscal deficit, of course, close to about 800 billion rand, will then be funded by local savings, which emphasize the point that South Africans are very much dependent on foreign savings if we want to invest. I've done some analysis. If we talk about the fiscal deficit of approximately 800 billion rand in the current financial year, total state spending on capital will be approximately 300 billion rand. That means that the state in the current financial year will destroy approximately 500 billion rands worth of capital or of savings. Now, the pattern is very clear. When we find ourselves in a situation like this, we've seen many countries going through the same sort of thing previously, and the outcome is always very, very clear. What first happens is that a government following the wrong macroeconomic policies with an ideology that we have in the form of the ANC in a tripartite alliance, first, they misuse the taxpayer until you run out of taxpayers, and that's indeed where we are currently. The second thing is you start consuming your capital. We have done that already. The state-owned enterprises is an excellent example. Operationally and financially, the state-owned enterprises have been run into the ground. The first port of call, or the third port of call, is the savers. That's the only pot of savings left in the country. And that, of course, is the pension funds, mostly. So that's the third pot of funding that will be raided, which I believe will happen. And then lastly, the whole thing always ends the same, and that's with very high levels of inflation. We're not there yet. Unfortunately, we have somebody in the form of Lesetja Kganyago that is running a very tight monetary policy ship. Of course, he's made many adjustments to monetary policy correctly the last couple of months. But the reality is eventually, I believe there will be more pressure on the South African Reserve Bank. So coming back to the question, we need funding for the likes of South African Airways. Eskom only needs approximately 250 billion rand in cash. They must get the money somewhere. The taxpayer is simply not available anymore. We can try to borrow more money, but that is running out of capacity as well. The local savings are simply consumed by current fiscal deficit as things stand already. And that inevitably means that other forms of funding must be found. And the only available source of funding will be foreign inflows of capital, which is certainly under pressure at the moment, or it must be the pot of gold that is remaining, and that is the pension funds. For that reason, I believe there is very little choice for the Minister of Finance if you continue. the fiscal accounts as it is at the moment, is to simply eventually then subtly try to convince the savers or the pensioners to invest in certain infrastructural projects or to fund the state-owned enterprises, also as an example, or to eventually force them. And I believe that if we do not change our way of doing business quite dramatically and quite drastically, I think it is inevitable that the Minister of Finance will, or the government will eventually, initially not force, but eventually will be forced pension funds to invest in certain state projects, like, for example, Eskom and the like. Maybe just a final comment. So if you force savers to invest in certain projects like the state-owned enterprises, of course, savers are not going to like that. And we've seen huge amounts of money leaving South Africa already. And if you force people to invest in state-owned enterprises or in prescribed assets, then you probably have to introduce foreign exchange regulations or tighten foreign exchange regulations as well. So there, in a nutshell, that's where we find ourselves. And I believe if we continue on the current trajectory, it is inevitable that our political leadership will be forced, in a way, to introduce prescribed assets, and that means prescribed assets for pension funds. Thank you, Marius, as a short summary.
Thank you, Dawie. We'll get back to a few questions just now on the economy and going forward. On Johan, welcome also. And just from our side, I would like you to give your view on the prescribed assets and the impact it will have on retirement funds and trustees, as well as the members of those retirement funds, and what we can expect.
Great, thanks, Marius.
Okay.
Good morning, Marius, and everybody that's joined the webinar. If my light switches off on this side, it's because I didn't move around enough, so I'll just wave my hands and then hopefully I'll have light again. It will not be load shedding, hopefully. Yeah, I really thank you for the opportunity to be part of this discussion on a topic, Marius, that feels like it's been around for quite some time, but continues to sit in the back of the minds of the boards of trustees, management committees, and members of retirement funds. And it's a very sensitive topic because it's something that could potentially affect the future of people's dreams, their aspirations, and also their financial independence during retirement. So maybe, in part of answering your question, I'll be covering a few areas. I would like to start off by just defining this policy of prescribed assets. And I think prescribed assets, or what they also call asset prescription, is interpreted by most people as a policy intervention whereby government will force asset owners, such as retirement funds, to invest in certain assets, such as government, parastatal, or infrastructure kind of bonds. So it is not a framework like Regulation 28, which currently sets limits within which the retirement funds need to invest the fund assets from a prudential guideline perspective. And for me, there's a big difference between a framework that guides a retirement fund on how it should invest its assets versus a policy that tells a retirement fund where it must invest its assets and how much. But back to some of the points that Dawie raised. Why are we having this discussion? First of all, because we need to urgently access funds that we need to invest in our economy so we can dig ourselves out of this fast-growing fiscal hole. In the supplementary budget on 24 June, the Minister of Finance referred to the active and passive scenario, with the passive scenario seeing us ending up with a government to debt GDP ratio of close to 130% in 2028. And that will put a lot of pressure on the fiscus from a debt repayment perspective. Second of all, it's because government can only issue so much bonds that investors are actually willing to buy on a weekly basis at the auctions, given that our projected budget deficit is going to be around 760 to 800 billion rand, which means about 2 billion rand per day. And the Reserve Bank also have a limited capacity to keep on buying the government bonds, of which it owns, I think, about 30 billion already. We also want to try and protect our fiscal sovereignty by not having to knock on the door of the IMF and the World Bank, which will set certain conditions and will demand accountability from government on how they've used the money that was borrowed from these institutions. And a fourth reason would be that investments by retirement funds will be a cheaper source of funding that comes with less strings attached than borrowing from the IMF or World Bank, which some people in the ANC is really not too keen on. And another obvious reason would be that South Africa has one of the biggest savings pools in the world as a percentage of GDP that is worth around 6 trillion rand that can be tapped into before we need to go and borrow money externally. And a final reason, I think, Marius, would be that we are facing the increasing possibility of a policy of prescribed assets that have to do with the fact that in South African retirement funds and asset managers have not taken the issue of ESG seriously enough. And much could have been done by retirement funds and the asset management industry in conjunction with government for asset owners to become socially responsible investors in social and infrastructure development. So why does this topic of prescribed assets unlock so much uncertainty and concern in people's minds? And a lot of people, when they hear this word prescribed asset, it raises their blood pressure, their heart rates, and also causes some feelings of anxiety. Well, first of all, it deals with the very emotional matter of people's retirement savings and the extent to which members will be able to retire financially independent in years to come. It also does not have prescribed assets as a policy, does not have a good track record in old apartheid South Africa, in Namibia, and various other African countries where it just did not work. And then there's the general issue of government policy uncertainty that remains. Now, be that in the form of land expropriation, mining rights, or anything to do with parastatals that result in a general lack of business and investor confidence. And then the issue of what I call the lost decade of the 2010s, during which time the wealth of South Africans, as Davie has also mentioned, has been declining in real terms on a per capita basis due to the mismanagement of our economy. Now, this largely came as a result of weak economic policy, state capture, deeply entrenched corruption, which resulted in much of our scarce financial resources being misappropriated, mismanaged, and applied in a very wasteful, ineffective, and uneconomical manner. Policy uncertainty, corruption, the lack of accountability by government, and the track record of wasteful expenditure, I think, Marius, have also resulted in a trust deficit that between business, labor, foreign investors, and government, and a lack of cohesiveness to actually get everybody around the table on the same path. And on top of that, maybe as a last point, for why this is such an emotional topic for many, is that we've also been through a period of low real returns that have been earned on your typical long-term growth-orientated retirement fund portfolios in the past few years. So various reasons for why this topic continues to grab headlines. But Marius, maybe back to the question about what this might mean for retirement funds, for members. There's a couple of things, and I'll start looking at it from a worst case scenario. First of all, a termination by employers and fund members of their retirement fund contributions, which will reduce our already low or negative levels of personal savings in South Africa. Then a withdrawal of members' savings from retirement funds. Early retirement in order to maximize, for example, the tax-free portion, resulting in members having to live off their savings for longer than they planned or intended to. And then also a flight of members' retirement capital that will be invested offshore. That obviously leads to consequences for the rand in the long term. And then the inability of funds, retirement funds, to really match their assets and liabilities with the appropriate assets in their portfolios. We're also looking at a deterioration in government's fiscal discipline, because now that has become an easy way out to just go and tap into the retirement funds. Then resignations by experienced fund trustees who might feel that they cannot fulfill their duty of acting with due care and diligence and in good faith. You could also be looking at below par returns that compromise the ability of members to retire financially independent. And then also quite possibly a permanent loss of retirement capital due to some kind of failed infrastructure projects or investments that this was not viable. And then retirement funds could become then the government's piggy bank to cover up other policy shortcomings. You could also again look at further credit rating downgrades that will result in even higher cost of debt. So the amount of debt will increase as well as the cost of debt. Inefficient capital allocation to non-deserving projects, which will also then crowd out the private sector, who also needs investments, fixed investments, and also then a disruption of the capital market functioning because there's going to be quite a demand suddenly for certain instruments in that market. And last but not least, a shortfall on the government employees pension fund, which is a defined benefit fund, might also result in additional taxes to be raised in order to cover that gap. But Marius, the fact is, we're all in this together. Something that needs to be appreciated is that what is good for the one will have to be good for the other. And what I really mean is that it will not just be the private retirement funds that will have to comply with the policy of prescribed assets. The government employees pension fund is also a retirement fund that has to comply with Regulation 28. And politically, it can become a very sensitive issue if government employees believe that their retirement savings are possibly being put at risk. And then very important for you, Marius, to try and keep a level head around this discussion is this issue of fact or fiction. And when you discuss this topic, you really need to carefully differentiate between fact and fiction. Now, the discussion document prepared by the ANC's Economic Transformation Committee that was released as recently as 2 weeks ago states that, and I quote directly from page 3, changes should be made to Regulation 28 under the Pension Funds Act to enable cheaper access to finance for development. Well, it is one thing for this to be stated in the discussion document of the ruling party, but it's a very different thing to actually implement such an idea as a formally adopted policy in a democratic and largely capitalistic society like ours. And there are various hurdles that will have to be overcome to make a policy on prescribed assets a reality. The other consideration is that a policy of prescribed assets is not the only option for retirement funds to contribute to finding a lasting solution to our need for critical infrastructure development. I think increasing the ability of retirements to invest in unlisted instruments through private equity managers by raising the 10% limit that Regulation 28 currently allows for is one alternative. Another would be the development of an infrastructure bond fund that is being spoken about that will be traded on our bond market. It will have a credit rating as most other bonds that's traded, quoted with a yield and issued with different maturity terms, and it might even have various levels of government guarantees. But Business for South Africa, the Association for Savings and Investments in South Africa, as representatives of business and retirement funds, as well as BATSITA, who represents trustees and principal officers of retirement funds, these parties are all engaging with government to find an inclusive solution that will match the needs of business, retirement fund members, and the economy. So I think while we need to keep an eye open, we also need to deal with the topic in a very pragmatic way and rather focus our energies on finding sustainable solutions that will be in the best interest of South Africans. And just to summarize my general view, I think my general sense, Marius, is that an announcement on implementing prescribed assets are not necessarily imminent, but that the ANC government will continue to test the waters and the reaction of the industry by making some noise about the policy, while also pleasing the coalition partners on the left by keeping the idea of prescribed assets alive in the ANC's discussion paper. And the chances are that some form of an infrastructure bond will be created, as I said, for the purpose of funding infrastructure projects. Currently, Regulation 28 allows for up to 10% in development spend, but only about 3% of that has really been taken up by retirement funds. So there is also still room to play with in terms of that. There's also no specific provision currently made for infrastructure investment per se in Regulation 28. And I think part of the solution could be to better differentiate between, for example, hedge funds and private equity from a Regulation 28 categorization perspective. And other options to consider are private-public partnerships, and then also the selling of some of the state assets to close the current infrastructure funding gap. And the retirement fund industry will have to start acting, engaging, and cooperating as one unified body to be part of a solution to address this challenge for South Africa. South Africa needs to become an attractive destination for foreign investors, which will also provide an additional source of funding, while government needs to regain the trust, I believe, of local business for fixed investment spending. And last but not least, for me, the key is about finding the balance in meeting the needs of different stakeholders, be it government, business, retirement fund members. The financial returns that you can get on long-term infrastructure and human development projects may be lower and they may take longer to realize, but they are the foundation for long-term social development and sustainable economic growth for our country. And a policy of prescribed assets, if it is well designed and it strikes a balance between risk-adjusted returns and long-term socio-economic development, can really go a long way in addressing the funding challenges the country faces. But it should not be allowed to undo the good work that the Financial Sector Conduct Authority, or the FSCA, has been doing around retirement fund reform in the last few years. So that's just my take on it, Marius.
All right. Thanks, Johan. Thanks for your intro and your view on the prescribed assets. Just interesting, Dawie, I want to hear from your side. We talk about investing in the infrastructure of South Africa, but we've also heard with regard to SAL, where Tito Mboweni said he's going to source money for SAL. Tell us a bit on your view on that matter, and how is that going to affect the prescribed assets issue?
Yes, I think the South African Airways debacle is an excellent example of the issues that South Africa faces at the moment. We know, for example, that South African Airways was put into business rescue recently, the past 6 months. I know that the Minister of State-Owned Enterprises, Pravin Gordhan, is trying to create the impression that he actually placed South African Airways under business rescue, which is not the case. He was forced to do that. It was not a voluntary thing. He was actually forced by a trade union with the name of Solidarity to put South African Airways under business rescue. They've decided, and I think this is the main issue in South Africa, they have decided to resurrect South African Airways. That's a cabinet decision, apparently. And I think the issues are clear for everybody to see now. We have a government that is intervening in this instance in the business rescue process. Pravin Gordhan, he's basically hijacked the whole process, firstly. And secondly, we've got a government that is hell-bent on keeping something called South African Airways alive in one way or the other. And that really has put so much pressure on Tito Mboweni, because he was, I believe, tricked into signing a document whereby he commits the South African government of sourcing money for South African Airways. Money that needs to come from somewhere, and some of the money needs to come from somewhere even as soon as today. So what are the options to Tito Mboweni? He can make use of his emergency powers. He has some emergency powers to spend money on South African Airways, but he's made it clear he's not going to make use of that. And in fact, the DA also made it clear that they will try to stop him if he wants to use that in court, but he did say he's not going to use that. If he wants to go through the budgetary process, he needs to, it's a whole process that needs to be adopted by Parliament, and that takes time, and he simply does not have time. He did say he's going to source the money from somewhere, and there are basically two sources available. The one is that he can simply guarantee the banks, if they want to lend more money to South African Airways, that he will repay that loans. I'm not so sure the banks will be that happy to provide the money. So, but that's a certain possibility. Or you can go to the PIC and ask the PIC to invest in this. Now, if you put enough pressure on the PIC, maybe you can convince the PIC that this is a good investment in the PIC. There's nothing stopping them from investing in there. But I do know that there are quite a lot of groups that certainly is going to do their utmost to prevent the PIC from investing in this. So I think we are, without a doubt, at the crossroads here. And the crossroads is basically today to see how they're going to fund South African Airways. Of course, the Minister of Finance is trying to create the impression that he's going to get private sector participation to fund this, and that's not going to happen. No businessman worth his salt is going to put 1 cent in South African Airways. So we are truly at the crossroads now, and I think what is important for us as ordinary South Africans is to understand that this is foremost a political challenge and an ideological challenge that needs to be addressed. And we're probably going to see that playing out in front of our eyes, maybe as soon as over the next couple of days.
Yeah. Okay. Thanks, David. Johan, how easy will it be to implement the policy of prescribed assets from a government and retirement fund perspective?
Well, Maurice, I think it will really depend on what it is that government will ultimately be looking to achieve with the policy of prescribed assets and how radical those proposed changes would be. But again, let us assume a worst case scenario, and that the idea is to change Regulation 28 of the Pension Funds Act to force retirement funds to invest in certain instruments prescribed by government. So I think any proposed changes will first have to be discussed by government with industry bodies like, ASISA or with BATSITA as well, as it will be critical to really get buy-in of asset owners and asset managers and retirement funds and also the trustees to make such a policy a reality. So I think aspects such as timeframes, which could take years maybe, the interest of members and the ability to implement whatever proposed changes are to be made will also have to be considered as part of the process. Then you're looking at, draft discussion papers, notices that will most probably have to be circulated for industry comment, with maybe 1 or 2 rounds of input obtained from industry players. And then, a change in regulation will have to be discussed and approved in Parliament, gazetted, and the changes to Regulation 28 then sent out by means of a circular for retirement funds to comply with. Now, I'm not a legal expert, but I think that is basically the high-level process. So it will take several weeks and months, really, to get to a point of actually legislating such a policy. And then, Marius, do we get to the practical issues of retirement funds having to then comply with whatever this prescribed asset policy is, and the enforcement of such a policy, as I think having a policy in place is one thing, but enforcing it is quite a different thing, actually. So there will have to be a consideration of the regulatory changes of Regulation 28 by the boards of pension funds and the trustees in consultation with their fund advisors. And then you'll start the process of, if there are different options available, finding the appropriate investment vehicle that will have to be identified through which you will actually make your investments to comply. And then you're talking about things like the mandates of the asset manager that might be involved, fees, what your performance benchmarks are going to be, because then suddenly it raises a very interesting question about what is appropriate benchmark for some of these investments. And then, the availability of sufficient investment opportunities will be a key requirement in order to avoid a situation of overinflated asset prices, maybe cash drags in your portfolio just because the retirement fund can't find opportunities, and then things like illiquidity in the process of funds all looking for a home at any given point in time. And, this could result in significant delays as retirement funds will also be reluctant to be the industry leaders in complying with the new regulations to the detriment of their members. So it's a case of who goes first. And I think Regulation 28 compliance reporting will also have to be enhanced and monitored on an ongoing basis. And then you also have to look at how will the consequences of non-compliance by retirement funds be addressed by the regulator. And I think really what I'm saying is, Maurice, you can see that a change in regulations of this nature will not be something that will just happen overnight at the flick of a switch.
Yeah. Okay. Thanks, Johan. Just on a point, I just want to move over to Davy. Davy, before I open it for the floor for questions, I just want to ask this question and then one other one for Johan. Is it wrong for a pension fund to actually invest in infrastructure going forward?
Well, of course not. Of course, that is part of the idea for remember, from an economic point of view, how an economy operates is quite simple, is that we produce X number of things every month or every year. Say we produce 100 bags of maize, and you can't consume all of this 100 bags of maize. You have to keep some of the 100 bags of maize back. We call that savings. And then you take this 5 bags that you didn't consume and you replant that. So if you don't have savings, you can't invest for the next season. And that's in simple terms how an economy operates. So in the economy, what you need in order to invest is you need savings in order to invest, and you need a return on those savings for the pensioners or for the savers, and that is the return on the investments. So there's absolutely nothing wrong for a pension fund to invest in any asset that provides a reasonable return, and that is the responsibility of the trustees to find those assets to get a return for the savers or for the investors. Unfortunately, and this is, if you go through the policy document of the ANC, unfortunately, is that if you force somebody to invest in something, then by definition, that is not an attractive investment. And that means inevitably that it's either a risky investment or the returns on that investment is not good. And going back to the ANC policy document on the economic proposals released about a week or so ago, they actually did say that part of the problem in South Africa is that the cost of capital is too high, and if we can somehow get the cost of capital down, then it will be cheaper to invest in certain things. Now remember, if somebody that borrows money to invest in a certain project complains about the cost of capital, then that means that person wants to pay less for that specific capital, but it also means that the investor in this specific project will be getting less of a return. And that's the issue. The issue is nothing wrong for a pension fund to invest. In fact, pension funds all over the world invest in infrastructure and all sort of things. The problem is if the returns are not good enough or the risk is too high and you force somebody to invest in that, that's the issue. And going back to South Africa, remember, and I think I see Heiko's asked a question about that, prescribed assets have been implemented in South Africa in the past very, very successfully, but not very successfully for the savers or for the pensioners. Their returns were dismal compared to other kinds of investments. So that is the issue. If you force somebody, then inevitably that means that the quality of that investment is probably inferior.
Yeah. Okay. That brings me to the question, Johan. Does prescribed assets mean that returns will necessarily be compromised? And is there a way that there can actually be enhanced returns on these types of assets?
Marius, this will very much be dependent on what exactly, again, the policy of prescribed assets will require retirement funds to invest in. Now, if the prescribed assets involves projects and instruments that trade in a liquid manner and in well-regulated markets, and where the underlying asset to the instrument has sustainable economic value, then there should not necessarily have to be a compromise in terms of the returns to be obtained by retirement funds for their members. However, one of the key concerns are that not enough investment opportunities might exist in order for all the retirement funds to be compliant with the prescribed asset regulations. Now, what you find in a forced situation, what that creates is, and where too much retirement fund money is chasing too few opportunities, that will distort the normal, specifically the bond market dynamics. It will create price bubbles and most probably liquidity problems, and then the chances are high for the potential loss of value of retirement fund benefits or maybe not such great returns. So I think it will be very short-sighted by government to put funds in a situation where the returns of investments are compromised and government then have to deal with much poorer retirees that will have to look after pensioners through their old age grants and also medical expenses during their retirement. Now, that is assuming that politicians actually think beyond the next term in office. But I think if members decide to withdraw their savings or resign in order to access the capital, if the returns are not what they should be, then they also lose the benefit of the power of tax-free compounded returns, which will have a material effect or effects on their ability to retire one day.
Yeah, right. Right, thanks, gentlemen. I want to open it up now to the floor for a few questions from our participants or the people that joined the webinar. Got a question here from Cheryl van Rooyen. She would like to know, maybe Johan, you or Davie, whoever want to answer the question, would there be limits in terms of Regulation 28 of what percentage of funds is to be used for prescribed assets? And do you have an idea of the percentage that they might look at?
Yeah, so I think that, as I said earlier on, at the moment, you find Regulation 28 being a guideline pretty much, and with certain limits, where I think the idea with prescribed assets would be to say that you at least have to have a minimum of X percent invested in a certain area, and specifically infrastructure, most probably. So the kind of numbers that's being bandied about is something between 10 and 15%. Now, as I've mentioned in the beginning, 10 or 15% of 6 trillion rand is a lot of money that will have to find some kind of a home, in kind of investments that is pretty much feasible and that has economic sustainability behind it. But, that is just my feeling around that.
Yeah, all right. Davie, you want to maybe mention something?
No, I can't add more to that. No, I think it's probably going to be in a region of about 10%. In fact, I won't be surprised if it's even a little bit lower. If we talk about 5% initially. If there's a 5% prescribed assets for pension funds, we're talking about huge amounts of money. As Johan indicated, we've got a very, very huge pool of savings in South Africa.
Yeah, okay. We've got a question here from Juanita Pilon. She asked, do you foresee a distinction being made between funds with a guaranteed income, example, the GEPF, and those with income based on asset growth, example, living annuities? And I think we're talking about your government funds where they work on a defined benefit basis, and then your most private funds on a defined contribution basis.
Marius, I would think that you should make a differentiation because the liability profiles of those types of arrangements are quite different. And that's back to the point that I said earlier on. One of the consequences could be that a defined benefit fund are not able to actually match their liabilities from an active member or a pensioner's perspective with the assets that they really need to hold as part of the investment portfolio. So I would hope that if prescribed assets do come in and there is certain kind of minimum target set, that they will take that into consideration.
Can I add to that, Marius?
Yes.
Yes, of course, we talk about guaranteed or non-guaranteed, as you said, different ways of saving. But remember, there's one guarantee that is not given, and that is you're not guaranteed that you're going to get an inflation adjustment increase every year. So although there will be some kind of protection, that the biggest enemy to any saver is inflation over time. And I did say at the beginning of this talk is that I believe that eventually inflation is going to be a significant problem in South Africa. And politicians is actually very much in favor of very high levels of inflation, because inflation erodes the value of money, but it also erodes the value of debt. So for now, that's not an issue, and I'm not concerned about inflation for now, but eventually that is something that we should be concerned about. So your inflation adjustment is something that you have to keep an eye on as well.
Yeah.
Yeah, and Marius, maybe just to add to that, again, most of these DB funds target a percentage of at least adjusting the pensioners' increases every year, percentage of inflation. And that could make things very tough for those trustees and those actuaries of those funds. And I think you go back to Transnet and we look at where those fund members have ended up with the kind of increases they got versus what inflation has been. And that has not been a pleasant experience.
Yeah, no, for sure. Got a question here from Kobus, Davie, maybe more to you or your side. How fast can government implement foreign exchange regulations, and will this most likely precede prescribed assets?
Yeah, well, we're not sure about prescribed assets. I think eventually it will happen because of the reality of the cash flows that we indicated earlier. My suspicion is it will make more sense to implement some sort of capital controls or foreign exchange regulation, or to tighten it before you implement something like a prescribed asset. And how easy is it to do that? And it's very easy. In fact, we have some foreign exchange controls already in South Africa, and all you need to do, if I'm not mistaken, maybe Johan can help me out, but I think the Minister of Finance can simply change those limits as he sees fit. So I don't think that is difficult for him to do. I don't think you need an actual parliamentary process to change that. I think that is within the powers of the Minister of Finance. But the sequence, it makes sense for me first to implement exchange controls, or to tighten exchange controls before you implement prescribed assets. Johan, do you have a view on that?
Yes, I think first of all, as you say, there's already in many of those instances, there's already a number. So it's just about adjusting that number. And I don't think it will necessarily require government to go back to different industries and consult with them, like in the case of prescribed assets.
Yeah. All right. Can we move on to the next question? I just want to, just from Heike's son, maybe where Heike asked, are there examples of where and how prescribed assets have been successfully used? And I think we can look at other countries, perhaps, Davy, from your side.
Yes, it has been tried by a number of countries, depending on what extremes you want to go to. We've had examples of communist countries where all the savings were prescribed in the past. It was a disaster. But I think the most successful, obvious example, like I've said earlier, is where prescribed assets have been implemented is South Africa. It was very, very successfully implemented by government previously. And of course, it was a disaster for the savers. There's many studies that have been done on this, which indicates that the returns on those assets were significantly below the other kinds of returns. But in terms of the implementation thereof, there are many examples of that, and there's little doubt that the introduction of prescribed assets is certainly not to the benefit of the savers.
Yeah, right. Then I've got a question here from Kobus Koens to Johan. Johan, as a professional consulting to trustees, what is the role of the trustees from a fiduciary perspective when it comes to the introduction of prescribed assets, if that is implemented?
Yeah, Maurice, that's such a relevant question. If you look at Section 7 of the Pension Funds Act, it sets out the fiduciary duties and responsibilities of the trustees of a retirement fund. And Section 7C1 specifically tasks trustees to direct, control, and oversee the operations of a fund in accordance with the applicable laws and the rules of the fund. Section 7 also requires trustees to really ensure that the fund's assets are invested in line with the regulations to the Act. So this basically means that if the laws require the funds to invest in certain instruments, then the trustees have to abide by those laws. The investment rules and the policy statements of the funds cannot override what Regulation 28 is basically saying, if it includes a requirement to invest in a prescribed asset. But then you look at Section 7C 2A as well, and that stresses the fact that trustees, while managing the fund, must take all reasonable steps to ensure that the interests of the members are protected. So how do you do that as a trustee if your hands are already tied behind your back through a policy of prescribed assets? Well, first of all, I would say, Maurice, that you must make sure that you stay informed on this topic, that you stay close to it, like, for example, attending this webinar to find out more, that you also become actively involved as a trustee in all the industry debates and discussions, that you also make sure that you communicate properly with all fund members on developments where necessary and where you've got factual information that you can actually share to also manage their expectations, for them to be able to make informed decisions, and then to provide input on any discussion papers and draft regulations in order to influence the potential outcome. So that's really, what, in my mind, what the trustee can do.
Yeah, for sure. Then just to clear, I don't see any other questions that has come through on my side. Thank you, gentlemen. I think it was we've learned a lot in terms of prescribed assets. Although there's not yet legislation, we foresee there's going to be a lot of debate still going forward. and there's probably will be a lot of webinars in terms of this topic. But thank you again for your time and effort. Thanks for sharing your information. And we hope to see everybody again at our next webinar. Thanks a lot.
Thank you, Marius.
Dankie.
Thank you.